Hi, welcome to a more in-depth review of the Dow trades for Wednesday the 20th of August 2014. The grey shaded area shows the market not open yet. This is the pre-market session, and what I've been doing here is looking at where the market's traded, looking at why it's pulled back to this area, so I get an indication of what's likely to happen when the market does open at 2:30. It's always important to be brief before you actually start trading, as opposed to just sitting down and waiting, get an indication and an idea of what's in the market. So that's what I do first and foremost. Here I can see that the market moved up in the pre-market session. It then traded back through the 16,900 BRN, the big round number. You can see some selling here, I can see some buying coming back into the market, and also see the market back above the daily pivot, which is a bullish indication. The market's also back to 76% retracement from this recent low to the recent high as well. So now I know exactly where I am as far as the background of the market's concerned. And it's going to be a moment or two before the market actually opens as well. So what I'm going to do is to fast forward. Just going to scrub along the timeline here, and you can see there's some selling coming into the market there back below the DP level. The market then reverses and moves back up, and of course we see the buying confirmed there, so the selling's been absorbed, and this is all pre-market. So I'm just going to wind on until we get to the white space, which is the 2:30 open there. I'll let this just run for a second. Let me just play this. Just wanted to bring this to your attention as well. This line that I drew in here from the recent low to the left, the market came down, had a look at it, notice the volume is now low, so whatever happened in this area has ceased as well. So let's move on. Again, we're playing with the DP level, which is not unusual at all. And then we get towards the market open, and it's now 2:30. We get a buy signal immediately from the off, and we've got this BRN in the way, 16,900. The order price is at 16,902. We see the market filling this. We've got to drive through this area with some buying in order to move higher. We've got selling to the left as well. Whoops, I'll just move that. Let me just put that back. We've got the selling to the left as well, which we can see here. So we can expect resistance in this area. It goes without saying. It's got to be. So we see the order being filled. Price is moving higher. We've got resistance to the left as well. We've got further selling in this area and in this area. So even though the market's filled it, there you go, I've popped on the 0 for you there when I was watching it live, and we can see this selling pressure come into the market, a huge amount of volume here, so we know they're selling around. The good news though, we've got the BRN. When a market breaks through a psychological level, the good news is that generally it will actually then use it as a support level. So hopefully the market will then sit on this as opposed to trading back through it. We see some new buying coming into the market, and this is always a good indication. And when you see this type of price bar as well, when the market opens on a new bar, and starts to move higher, generally it will continue to do that. It will sort of drive higher. In this case it came back, looked at the BRN, and again you can see this time it's towards the end of the 5-minute period there, it trades back up to the resistance to the left. Notice how this is holding because it was a previous selling area. And then we see the market come back down, we get some potential weakness there, and eventually we're able to drive through. Watch the volume build. You can see the volume there building, and again we've got some selling pressure because we're absorbing the selling as we go through this area towards the 20 pip scalp there. By being able to read the markets like this, it allows you to make more objective decisions about what to do in the trade, as opposed to subjective emotional ones, because you can actually read what's going on. And once you understand these price bars, which there will be videos about the individual type of price bar and what it means and what you should look for when they actually appear, will allow you then to be more objective about what it is that you need to do in the trade. We've hit the 20-point scalp, and at this point what I tend to do, this is a personal thing, a lot of people will say, right, I'm having the money, which is fair enough. And myself, I prefer to sort of take half off the table, move the stop to break even, and then leave the other half fishing just in case the big one comes along. So this is a technique that I've developed over years, because I would get out at the 20 pip scalp, then see the market go off into another 50 or 60 points and be gutted that I wasn't in. Of course, conversely, I can be in and then give up half the profit as well as it comes back down towards break even, but that's the risk that I take. The reason I are using this principle at the moment is this market's trending heavily towards the upside, which you will have seen in the market view. The background is we've got a V-shaped correction going on in the market at the moment, which means the market's going back to the all-time highs. So the long side is the best side, and then using this information and applying it to what I see in the 5-minute chart, I can then hold the trades for the longer term, and that's the rationale behind why I'm actually doing it. It's not just an arbitrary thing that I'm doing. So we see the market then at the 20 bar there. We've not managed to close through convincingly yet. We're just stuck in this sideways range. And of course, Yellen's speaking at 7 p.m, so the market's likely to go sideways after having made its initial move. We now see the market going through the scalp. We're up to 25 pips there, 25.8, 26, and we're at yesterday's high. Important, yesterday's high needs to be taken out convincingly if the market is to move higher, unless there is no selling around. If there's no selling around, the market can move higher. It's as simple as that. There's no resistance. So now what I'm doing is just going back to the IG account there, just having a look. And here we see a bit of selling coming into the market on this bar here. It's higher than the previous bar. The market's come off the high. It's closed near the lower third, and we're near the resistance 1 target as well. So we need to stay above the high of the previous day in order to move higher. And what I'm going to do is just to wind this forward, and you can see now I'm using the 100% extension because I've actually got these rising lows now above the scalp area. So this allows me then to move the stop and lock in the profit. The market's also heading up towards the next BRN, which is going to be 17,000. So I've got this in mind as well. So there we see moving the stop again. We're getting another higher low, and you'll see me moving the stop underneath this up thrust, potential weakness coming into the market there. So now I'm looking in the profits as we go. There's 43 pips on the table, and I've just rescaled the chart there so it's easier for you to see. And whoops, let me just go back there. There we go. And what I was doing here was drawing in real time for some unknown reason. This is playing around here. Just let me see if I can stop it from doing it. Oh, it's very strange. Let's see if that's cured it. Nope. Right, we've sorted that, so let me see if I can play this through now. Yeah, so I've drawn in 0% above the high of this up thrust, and there you can see me in real time. I'm drawing this line on the chart there just to bring it to your attention that we've got this BRN here, and this is where the upside target should be, which give around 50 points there for the actual trade. So that's what I was doing there, just highlighting the upside target there. However, boredom got the better of me, and as I just move this forward a bit more, you can see their prices went into a sideways range, and you can see there I'm writing on their trade closed because we've got Yellen speaking at 7 p.m. and I got bored. And you want to try writing on a screen with a mouse and a pencil. It's very difficult, so please excuse the illegibility there of the writing there. Trade closed because I was bored. So moving on, I went off and did something else and would come back around 7 p.m. But of course Murphy's Law takes over and the market then trades up to the BRN. And there we see some buying there, just driving through, and then the market trying to hold above, but going into a sideways range. So now I'm just going to drag along here just to bring things up to where Yellen's going to be speaking. You can see the buying coming into the market beforehand. Price is trading up to the left-hand side of the chart there, where we've got the buying. We're through the BRN, and then the market goes into this sort of sideways. We've got the buying followed by some selling there, and then we're just about to get the announcement. We get a sell signal just before the announcement. It would be unwise to take this at this time because it's a high impact news item. You never know what Yellen's going to say, whether it's the truth or should we be polite or untruth, or say whatever she's going to say in order to get the market to do what the Dow is in an asset bubble at the moment. It's gone up on QE money, and they're going to use any excuse to keep this asset bubble alive. In its simple terms, that's what it is. So whether she's going to say anything that's true and correct or not is irrelevant. They're just going to try and keep the asset bubble alive. So we get this sell signal. It'd be unwise to take it because, like I say, you never know what she's going to say and do. So there's the announcement. You can see whatever she said sent the market down. We see the selling. When you get selling, you then see testing. And there you see the testing coming into the market as well. And it's definitely not worth listening to Yellen or anybody else on Bloomberg or any of the market channels. Look at the price bars, understand how the market works. If you have selling, they will test for selling. The market is a buyer's market in the background. When it's a buyer's market in the background, look for shakeouts. This is a shakeout. The market shakes out, you see the buying coming into the market. So we now get a bit more of a test. What I'm doing here now, I wanted to see where the low is for the day. And what I'm going to do, I think if I can just play this, it will probably show you. Yeah, I'm drawing in. I'm looking for where I could expect the market to find support. So I'm going from the low of today, which once I get onto the right to price bar, which is where we had the PTP and XXX signal, up to the recent high. And I'm looking to see if the market's going to find support at the 62% there. The low of the test bar that I've drawn in as well, that 16,920 is crucial. If the market takes this out, it will probably test at the 62% as well. So we're seeing that low being tested at the moment, and I'm just about to reset the chart there just to make things easier to see. So I've drawn in the 62 and 76 to see if we're going to get a double test in this market. And once I've stopped messing around with the screen there and got it sorted. So we're seeing the market now holding at the low of this test bar, and having had a look at the 62% as well, which was drawn in before that happened. So now we're seeing the buying coming back into the market. Watch the volume. So the selling's disappeared, the buying's in the market. We've retested the low of this test bar as well. We've gone through, had a look. There's no selling around. The buying's been has come into the market, and now we're going to see prices moving back up towards the BRN there that the market's come back through. So I'm just going to speed things along. We've got a XXX signal. We also have some selling pressure here, and we have the entry point above the BRN at 16,957. And we know that we've got to see new buying coming to the market. We've got resistance to the left as well. This is where the market's dropped since Yellen spoke. So even if this order is filled and qualified, we've got a problem at this level. Again, you should be looking for the sort of trading minds, as it were. And what I've done here now as well is also added in a 76% retracement from the recent high down to the recent low, and it coincides with the entry price. I know this is going to be a sticky area, and it's going to require new buying to drive through this, but I know in the background, in the daily chart, that we have a V-shaped correction going on, so the market's likely to drive to the upside following a shakeout. We see the order filled and it comes off. Well, no surprise there. So what I'll be looking for now is the market to not close below the psychological level. It's struggling with the 76% retracement and the entry price, and in order to move higher we need to see new buying. So what I'm doing here now is adding on that 0% extension, so I can see how the market's going to react once it trades up to this level. And we'll see what happens. There we go. We've gone through the zero now. Is the volume going to increase? It actually went through on fresh air, and that's because the selling took place here. The shakeouts happened, so the market's free to move up on lower volume because there's no selling around. The market will have to move up on in two ways: either very high volume to drive through selling areas, and also those selling areas, if there's no selling around, then it can just go through quite casually, which it's done on this occasion with low volume. The scalp is now hit. We're heading towards the late part of the session. So personally, it's time to exit stage left, really, because there's not much else that's going to be in the trade. One thing that I did do here is add on a zero extension above the high of this bar to see if the market's got anything to drive through, and I placed 100% above, which actually coincided with the 17,000 area, to see if the market would trade up to there as well. I'm actually out of the trade at this point, and it was just an academic exercise that I was trying to see if the market would trade up towards that 100% target. As a way of developing another tool to make projections off each price bar as well, something I'm working on. You can see it came close to it, but it is a psychological area that needs to be taken out with new buying. And that's the end of the trading session there. And the end of this tutorial. I hope there's valuable information in here. There's certainly an awful lot of information, and you may want to watch it several times. But once you get this fluency in reading the markets and interpreting each individual price bar based upon what's in the background, trading is a lot of fun and a lot less stressful than not being able to read the markets and relying on somebody else providing the buy and sell signals for you. If you can read the markets, you can read what they're doing, then you can predict what they're going to do, and then you can use that in order to trade. There's a lot more sophisticated things that I will share with you as we go forward, how you could actually see down into a smaller time frame what's happening in these sorts of areas here in the buying, so you can actually get into the trade a lot quicker as well. But that's more advanced stuff. That's going to come later on inside of the Dow trading strategies. It's basically 20 years plus of watching the markets in real time and then imparting that information to you. So it will be available as and when I get 5 minutes to actually record it, and also obviously do instructional videos first on why I'm doing it. So anyway, that's enough waffling from me in this video. Hope you've enjoyed it. If you have any questions, then do get in touch. We'll only be too pleased to assist where necessary as well. See you in the next one, and thanks for watching.